Real estate development as an industry has always been an attractive form of wealth creation, ranking in the top 10 of all industries for creating global billionaires. And with its ability to incorporate various different financial structures, allowing entrepreneurs to leverage other people's money to succeed in the area of real estate development, it's no wonder why many entrepreneurs gravitate towards the area of real estate development as a form of wealth creation. And so if you're thinking about becoming a real estate developer, then stick around for this video as I'm going to be explaining how you can become a real estate developer. My name is Aaron. I'm a chartered quantity surveyor and owner of Haydon Construction Services, a management consultant to the real estate development and construction industry. And so without further ado, let's get into the video. Now essentially what I'm going to do for this video is I'm going to break the video down into what I like to call two phases. So phase one of becoming a real estate developer is all about your planning, and phase two is all about execution. So on the subject of phase one, the first thing that we need to do is really take stock of the experience that we have and who we are as an individual and how we can capitalize on that experience to become a real estate developer. Now, I would always say that if you're a college graduate or you're a university graduate and you're thinking about careers that could put you on the right trajectory to becoming a real estate developer, then I would really consider careers that are related to the real estate development field. And that could be, for example, your careers working with construction contractors or general contractors, careers that involve project management, site management, also quantity surveying, structural engineering, architecture, some form of career that enables you to build a foundation in understanding the ins and outs of project delivery. Because obviously with real estate development, there is a lot of risk when it comes to project delivery, when it comes to construction, especially when you're talking about large scale multi-unit projects. Being able to understand that risk from a professional's background is going to put you in the right position to go forward and succeed in the area of real estate development. But other careers that could see you having a bit of success within the real estate development sector could be, for example, working as a commercial real estate broker. It could be working as a commercial real estate lawyer. Having some form of transactional experience in the field of real estate is going to play to your advantage. So again, if you do come from this background, it's good to take stock of that and think about how you can build on that and capitalize on that experience to become a real estate developer. And if you're a college or a university graduate, then it's worth considering these careers because it can set you on the right path to becoming a real estate developer. And so the next thing to consider as part of our phase one, our sort of planning towards becoming a real estate developer, is to actually put together a business plan. Now, a business plan is very useful for those who are in the early stages of planning to become a real estate developer, because essentially what it does is it helps you to get those ideas out of your head and down on paper so that you can start to think a little bit more clearly about your long-term goals and strategy for planning and executing real estate development projects. And it's also useful to have a business plan in place if you do find yourself speaking to joint venture partners or investors. It helps you to set out a clear vision and a clear plan and a strategy for what it is that you're hoping to achieve from real estate development in terms of how you're going to raise finances and how you're going to put those finances to work and deliver real estate projects. I will be bringing a separate video in the future at some point on business planning, but essentially there's a number of key components that go into creating the business plan. And you want to be touching on things like geography, thinking about where it is that you're going to operate. So what areas of the country do you have a lot of knowledge? Are there any areas of your city where you really understand prices, you understand the local market? So it's really good to include a section about geography, where you're going to be operating your real estate development business. You also want to be thinking about your asset class. Are you going to be specializing in residential units, industrial units? Is it student accommodation where you have a little bit of experience and you're thinking about specializing in that area? Again, you want to be thinking about your asset class and what area of real estate development you're going to be specializing in. You also want to think about how you're going to incorporate your business. Are you going to set up a limited company? Is it going to be a standard corporation, or are you going to set up a limited liability partnership agreement? Are you going to be structuring your business offshore in a more favorable tax jurisdiction? Now, all of these things should be considered as part of your business plan. And that also goes for your financing strategy. How are you going to finance these developments? Are you going to be looking at senior debt with bank financing? Are you going to be looking at bringing in some mezzanine financing, maybe some bridge loans? Are you going to be looking at 100% joint venture partners, or maybe a joint venture partner who can plug the equity gap for senior debt? All of these things, again, they need to be considered and incorporated as part of your business plan. And finally, you want to make sure that you have a disposal strategy. So thinking about what it is you're going to do at the end of the development project when you've built the unit. Are you going to dispose of all of them, or are you going to hold some of them as an investment and gain a little bit of capital appreciation over a 3 to 5 year period before selling them on to another investor? Or are you simply looking to purchase land and buildings, developing them into units that will be held as part of a long-term investment, where you will then stabilize the asset and pull money back out of the deal to then go ahead and complete on another deal? Now, the next part of our planning phase is building our development team. Now, we can't succeed in the area of real estate development without building a really good team around us. So as part of your real estate development team, you want to be thinking about the right individuals who you can bring into the business, either as employees or as consultants, who can help push your business forward so that you can take a little bit more of a hands-off approach and focus on your key areas of strength. And so just listing out some of the key members that could make up your team is that you want to make sure that you have an acquisition specialist on board. That could be, for example, a deal sourcer who is responsible for finding deals. They could be somebody that has a lot of knowledge within the local area, and they're able to build those connections and those contacts with landowners and building owners. They've got really good relationships with local commercial real estate brokers, and they're able to bring you deals on a consistent basis for you to appraise. You also want to be bringing an architect and a structural engineer into the business. An architect is often worth their weight in gold, especially when it comes to obtaining planning permission. They should be able to come up with concept designs and ideas of how they can get a potential development through planning or zoning, so that you don't have to worry about any issues with the local authorities when it comes to breaking ground on your development. Again, also thinking about your quantity surveyors, your project managers, and also your lawyers and accountants. As part of the planning phase, you also want to be thinking about how you're going to finance these deals. So very important, and this can save you a lot of time in the future before you go ahead and start executing on real estate development projects, is to try to get some form of financing in place, is to have those early conversations with finance brokers, with joint venture partners, and also senior debt lenders about how you can go about financing potential deals. And this really all starts by taking inventory of your own financial position. It could be that you have some money that you want to invest into the deal yourself, and so therefore you're less reliant on joint venture partners. It could be equity that you have tied up in existing deals that you're looking to draw out and invest into deals. It could be other liquid assets such as stocks and bonds that you could sell if you see the right opportunity to invest in a real estate development project. Or it could be joint venture partnerships. It could be working with high net worth individuals who don't necessarily have the skill set to undertake their own developments, but they're quite interested in investing in viable real estate development opportunities. And then obviously thinking about if you're going to use mezzanine finance, if you're using bridge finance, how are you going to finance your deals? It always pays as part of the planning stage to understand how it is you're going to finance these real estate development projects, and getting some sort of finance in place already, or some sort of line of credit open ready for when you start the next phase, which is all about execution. And so let's move on to phase two, which is all about the execution of real estate development projects. So we've talked about the planning. Hopefully you would have had a business plan put in place, you're quite clear on the geographic location you're going to be operating in, you're quite clear on the asset class, you understand how you're going to be financing the deal, and you've also built a robust team around you consisting of architects, structural engineers, project managers, quantity surveyors. So now what is the first part of executing as part of a real estate development deal? Well, the first stage is to now start your site searches. And so you could be searching for sites or buildings that have planning permission already in place, or you could be looking to acquire sites that don't have planning permission because you may have an architect who is proficient in the area of planning and design. You could be looking to source off-market opportunities. So you could be looking to speak directly to vendors. So you could be looking to speak directly to individuals who already own the sites as opposed to going through a real estate broker. And that way you're having the conversation directly with the vendor and you're more likely to source opportunities below market value should you decide to go down the route of sourcing off-market opportunities. However, that is debatable because many people believe that landowners will sell for fair market value, so there's no real benefit to sourcing off-market deals, but I still believe that there is a benefit simply because you're having those conversations directly with the seller and you are able to better negotiate deals. Also, depending on your acquisition strategy, you could be looking at purchasing property and land through auction. You could be looking at vacant lots or abandoned buildings and getting in touch with the local authorities or owners of those properties to see if there's any potential to put an offer in. Or you could already own buildings that you're looking to get a change of use and convert what may be a commercial building, such as offices, into residential units. So again, it all really boils down to your acquisition strategy. Part of phase two, which is your execution phase, is actually about getting out there, looking at sites, looking at deals, and trying to secure a site to purchase and undertake your first property development. Again, you've got to become proficient in development appraisals. This is something that you're going to be doing quite a lot. On average, from my understanding and clients that I speak to and undertaking some developments myself, you're probably looking at on average about 20 to 30 deals before you find something that actually stacks up on paper and is actually worthy of a little bit of further investigation or a potential site visit. So you've got to look at a lot of opportunities before you pull the trigger and make an offer on a potential site. Now, if you don't have the time to do this, or you're not necessarily skilled in the area of real estate development appraisals, then it's always useful to reach out to your quantity surveyor who can help you with this. And by the way, this is a service that I do offer. I help property developers decide whether a site is right for them. I look at the numbers in terms of the construction costs, the gross development value of the project, and how much profit the deal could potentially yield. And so if that is something that you're interested in, then reach out to me. My details are in the description of this video. But really, it's all about becoming proficient in looking at deals and understanding where there's potential to add profit and negotiating the right acquisition price for those deals. And so you've looked at a deal, you believe that you've got something that stacks up on paper, which is going to be profitable. The next step is to get that site under offer. Now, there's various different ways that you can do this, and it's always best that you speak to your lawyer. But there are different ways that you can make an offer. You can simply put an offer in on a site and hope that it gets accepted. But if there are specific risks involved in a project, for example, you're unsure whether you're going to get development financing in place or whether there is potential scope to get planning permission for the type of building that you want to build, you can always put forward an optional agreement. What this does is it enables you to get the site under offer and do the work in the background to get the planning permission in place or to get your financing in place. And should you fail to obtain planning or zoning, or should you fail to get the financing in place for the deal, it means that you as a buyer is under no obligation to actually have to purchase that site. But what it does mean is that if you do get planning permission in place, it means that the seller of that particular site is obliged to sell you the property or to sell you the site. So a very good way of being able to manage risk, but I would highly recommend that you speak to a lawyer and make sure that you seek professional legal advice before you go about doing that. Your next step is then to get financing in place. Now, hopefully, as part of the planning phase, you would have already built those connections with joint venture partners, with banks, various different mortgage brokers, and it shouldn't be too difficult for you to get the finances you need to undertake your development. And then once you have the finances in place, you're then comfortable that you have the finances there to be able to acquire the site ready for the next phase, which is the actual project delivery. Now, this would be where you have your quantity surveyors, your project managers, your contractors, and your architects all working together to actually build your real estate development project. And then once the project has been completed, you then need to think about your exit strategy. And again, this is all about how you're going to market your development. If you're marketing the development for sale, then are you going to use local estate agents or real estate brokers? If you're thinking about renting the units, then obviously you need to think about your marketing strategy to market the development to the right target audience. And then obviously if you do sell the site or you do end up selling the developments as completed units, you need to be thinking about how you're going to receive those funds, how you're going to pay down any debts, and obviously pay interest to investors. And the final part of the phase two, which is execution, is to sit down with your team after the project has been completed and run what I like to call a lessons learnt workshop. And this is where you essentially sit down with your team, you think about what went right on the project, what did you do that was really good, what was a great success, and you're thinking about areas of improvement, where did you make mistakes, what could you have done a little bit better. And having that workshop really helps you to think about how you can approach the next real estate development project and how you can go about having more success and creating more profit. And so that's it for today's video. I really hope you got something useful from this. Don't forget to like this video and comment below. Let me know if you're thinking about getting into real estate development. Subscribe to this channel to watch more videos on the subject of real estate development and construction. Once again, my name is Aaron. I'm a chartered quantity surveyor and owner of Haydon Construction Services, a management consultant to the real estate development and construction industry. Until next time, thanks for watching.